Hello traders, the title of the video is USD currency trader lifted the lead of his Forex trading strategy. USD currency trader lifted the lead of his Forex trading strategy. For traders that are very new to Forex trading, USD stands for the dollar, the US dollar, Canadian currency pair, the US dollar, US Canadian dollar, currency pair, all right, US Canadian dollar, currency pair, all right, US dollar, Canadian dollar, currency pair, USD card, all right. So talking about USD card, currency trader lifted the lead of his Forex trading strategy. What can we say to Forex traders at this junction, looking on the monthly chart? There's one very important key levels, all right, to avoid trading Forex blindly. All right, I want to highlight one very important key level for traders that are trading in the USD card. That levels is the red horizontal line on my chart at 13550. All I will say to traders at this point in time is that priority to bullish signal above 13550 and priority to bearish signal below 13550. As you can see recently, the price was going up, and as he reaches that level, he found a resistance. Alright, there was a resistance there, and the price started coming down. You can see that it came down almost near this level of 13098. But also recently, the Federal Reserve has changed their policy. They start putting up interest rates. So talking about monetary policy by the U.S. Federal Reserve, they are hawkish, so to speak, contrary to, there's another word, the opposite of hawkish is dovish. They are hawkish, which means they are willing to increase interest rate. So what they are doing, they want to the dollar, okay, to appreciate against other currencies. They want, okay, money to come into United States. They want savers to invest in United States where the interest rate is likely to continue to go up because it's now at the bottom, almost near the zero level, and recently they increased it to 0.75. So if they continue to put up interest rate, which is almost near the zero level, it's a reversal of the previous policy. So talking about previous monetary policy by the U.S. Federal Reserve, they were devaluing the dollar. They were cutting interest rates. And the dollar was going down. Alright? But recently, they start putting up interest rates. And a lot of hedge fund market participants will be willing, forex traders, will be willing to buy the dollars and sell other currency. So currency pair that are starting with US dollar something, US dollar Norwegian krona, all right, US dollar, US dollar Norwegian kron, US dollar Swedish krona, anything that is starting for you with US dollar, they will be willing, okay, US dollar, okay, Swedish krona, US dollar, okay, and so on. They will be willing to buy those currencies, all right. So euro, dollar. So they will be buying the dollar against the euro, which means the euro dollar has a more chance to go down, looking at the Federal Reserve policy. All right, British pound, US dollar. So you have to understand also that in Britain the policy almost was similar because they were cutting interest rate in United Kingdom also. So people are a little bit careful. There are other issues relating to the British pound, US dollar, which is the Brexit. I will not go into that now. So the point I want to make is that we want to give priority to bullish signal above 13550 and priority to bearish signal below that level. Alright, very important. The reason is that as I discussed this with area weight traders before, at 2-4 Elliott Waves YouTube channel, we have seen 5 waves here. 1, 2, 3, 4, 5 waves. Alright. And now the price pull back like this. Alright. And then we apply Fibonacci retracement to this price action. This move from here down to this level here. We apply Fibonacci retracement to that price action, this correction that has begun here. And we were saying to traders that we need to be aware of the 50% Fibonacci retracement level or this move down. So therefore, for traders that are trading the US dollar, Canadian dollar, or the USDCAD currency pair, they must be aware of 13550, prior to bullish signal above and prior to bearish signal below. As I've also mentioned it to traders recently, in a video that I titled, I'm looking for it now, what should one know about Fibonacci extension? What should one know about Fibonacci extension? That video, I posted it at Day Pro Traders YouTube channel. You want to watch it and understand how other traders are using Fibonacci, okay, retracement, Fibonacci extension. So you can see that here, the way I draw my Fibonacci retracement, I draw it from the top of the shadow of this candlestick bar all the way to the low here. And that 50% level is 13550. There is another group of traders that will draw it from the closing price. So this is what we are talking about, okay? Draw it from the closing price to the closing price. So for those traders that are drawing their Fibonacci extension from the closing price to the closing price, instead of using the high and the low to draw their Fibonacci retracement or extension, their 50% Fibonacci retracement level is somewhere near the level of 13247. Alright? 13247. But for this tutorial, I prefer that they use the first, okay, 50% Fibonacci retracement level, which we have drawn from the high to the low, that is giving us that key level of 13550. So prior to bullish signal above 13550 and prior to bearish signal below that level. Very, very important. That's the red line right here. Going to go now to the weekly chart. Okay, we are now on the weekly chart. As you can see, the price, if you look carefully here, is in to draw a trend line like this. Alright, I'll change it into green. On the weekly chart, we draw a trend line like this. So pay attention to the green trend line. I'll use this high instead. Yes. Pay attention to the green channel on my chart. So I connect this point, and this point here allow me to draw the first green trend line. Let's remove my connecting this point and this point. We have the first green line, green trend line, and I just choose this point here, which is the high of July 2016. Alright, with those 3 points, I have my channel. So on the weekly chart, the price is in a rising channel. That's the green channel on my chart, and we do not want to violate the market pattern. I'm drawing now the median line of that green channel. The price is now on the edge of that of the median line of that green channel. That's the dark green line on my chart. So you see now, so we have this green channel on the weekly chart, and we are now near the median line of that green channel. Alright, but though we are saying to trader to give priority to bearish signal below the 13550, we need to make sure that there is a rally first before we sell. Don't just sell because it is below it. Because what has happened, what is the price doing now? Okay, it is in a rising channel, but it went down, you see, It went down to the edge of, can you see? It went down to the edge of that green channel where bullish traders bought it. So it went down from the top to the lower part where people bought it. All right. So what is the price doing now? The price is going back up. It's going back up. All right. So if you are saying prior to bearish signal below 13550, we will prefer it to continue to go up near that level, and before we'll start looking for bearish trending setup. Or it will break back below the median line, or break below the median line, come back below, because now it's the boy, breaks below the median line, retest it. And then we will implement a different time frame trading method to trade it. So, talking about prior to bearish signal below 13550, but we do not want to violate the current market pattern. It is bullish. It's a rising channel. So therefore, in a rising channel, the only time that we want to sell is when the price fails to display a new high. So here we will wait for it. If you come near this level, find a resistance, that will be equal high. And if we see a bearish trading setup here, we'll implement a top-down trading method to trade it carefully. Why carefully? Because it is in a rising channel. Okay, it is in a rising channel. But looking at the Federal Reserve policy, as I mentioned it to you now, it will be better for swing traders and position traders to concentrate only on bullish trading setup. Alright, but another thing I need to mention to you, the USDCAD is a little bit different than the dollar yen. It's a little bit different. It does its own thing. That's why some traders call it the looning. It does its own thing. It's a lonely currency pair. It does its own thing sometimes because it's directly connected to the crude oil. Alright? Most of the economy of Canada depend on oil. So you need to understand that what's going on here. But with the market pattern, you are likely to make better decisions. We are in a rising channel on a weekly chart. The price pull back to the edge. People start buying it, but we are near the median line. But do not forget that prior to bear signal below 13550, you want to sell on the edge, break below a trend line, retest, or find a resistance. Use a multiple time frame trading method without ignoring the economy news. All right. At forexfactory.com. Alright. If you have any question or suggestion, alright, put in the comment section, and in due course I will be recording another video to answer your specific question. If you forget everything else, alright, do not forget the media that key level 13550 prior to bearish signal below and prior to bullish signal above it. Alright. Trade on the edge, be aware of the trend line and the key levels. We drop it down now to the hour, to the daily chart. That rising channel is still in place. As I'm telling you now, we are near the median line. So if it breaks below, retest, final resistance, okay, we can, for day trading purposes. So day traders that are selling, okay, we look for bearish trading setup, bearish chart pattern on the edge, break below, retest, and then take it from there below the 13550. I will recommend to swing traders that want to sell to avoid doing that, because if you are selling it now, you are trading against the Federal Reserve policy, which means appreciation of the dollar against other currency pair. But for day traders, they can sell, they can buy if there is an opportunity to buy or to sell on the edge. So attention now to the median line of that green channel, but do not forget 135 okay 50. Go to the hourly time frame. Here it is. And the hourly time frame is now clear to us that it is above that median line. This is today. I'm recording this video today, and today is the 20th of December 2016, and the time in London is 11:30 just now. And see breaks above it, we leave final support. So okay, so on the hourly time frame we have this significant high. Price going up, it must form higher low, say high. This is a significant high. You went to it for the resistance, now it's coming back down. So if you want to buy, like here on the hourly time frame, you need above 13415 before you want to challenge it. Alright? If you have any question or suggestion, put in the comment section. And in due course, I will be recording another video to answer your specific question. The most important thing to remember, if one is trading the USDCAD, priority to bear signal below 13550, a priority to bullish signal above it. Swing trader, position trader must align their strategy above that level, giving priority to bullish signal. But if you are selling below that level, be careful, because it's against the Federal Reserve policy at this junction. Doesn't mean that it cannot go down, but you need to be aware of it so you can control the risk carefully. Always trade on the edge and use different time frame trading method without ignoring economy news at Forex Factory. Alright, it makes sense. So that's the media line. You see the dark green line, that's the media line. If you go to the 50-minute time frame, let's see what traders are doing there. So you see here, they sold it on the edge of that media line, of that green channel. The green channel on the weekly chart, they sold it here. Price from a lower high, so this. But here, this is, you see, this is what we are talking. Price from a high and a lower high. Okay? So in a downtrend, what are we paying attention to? To the low. So after forming a lower high, it failed to form a new lower low. This one here is a high probability trade, because it's a failure of a bullish progression. A lower high followed by okay, equal low or higher low. It's a high probability trade. And here, scalpers, you should understand the language of the price. Here it is, boom, up. So we are now at the resistance. We are near the media line of that green channel on the weekly chart. So you will say, Joe, you always talk about the monthly chart, weekly chart, yearly chart. But here it is, we can go from a higher time frame back to the 50-minute time frame and make our decisions on the edge. Look for bearish chart pattern, pay attention to the market pattern. Anytime you change time frame, pay attention to the market pattern on that time frame. So we are now on the 50-minute time frame. Here we are. We can draw a line like this, okay? So can we say that there is a kind of a consolidation taking place on this 50-minute time frame between this blue line, and this one here that is near the media line? You see now? Market pattern. Alright? So you want to buy, you know now that because you are not trading blindly, you know this, okay, media line. Alright? You know that this is the media line of that chart on the weekly chart. So if you want to buy, you will position yourself above 13415. This is the end of this tutorial. The discussion was about USDCAD currency trader lifted the lead of his Forex trading strategy. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.